The Ichimoku Cloud Indicator, which is available for various platforms on the TradingFinder website. Traders can access the indicator on the TradingView website from this section, and to learn how it works and how to use it, they can also refer to this page. To access the indicator on the TradingView website, go to the Indicator section, search for the name of the indicator, and by selecting it, you can apply it to your chart. For quicker and easier access to the indicator, you can add it to your favorites in TradingView by enabling the Add to Favorites option. Once the indicator is enabled on the chart, it starts drawing the Ichimoku Cloud on the price chart. The Ichimoku Cloud Indicator is a special and practical tool considered one of the most comprehensive technical analysis systems. It uses 5 main lines: Tenkan Sen, Kijun Sen, Senko Span A, Senko Span B, and finally Chiku Span. This allows traders to identify trends, momentum, and support and resistance levels at a glance. When the price is above the Ichimoku Cloud, it indicates an uptrend, and when it is below the Ichimoku Cloud, it signals a downtrend. Finally, when the price is within the Ichimoku Cloud, it reflects a ranging market and market indecision. In this indicator, the blue line is known as the Tenkan Sen line, while the red line is called the Kijun Sen line. The green edge, which represents one side of the Ichimoku Cloud, is referred to as Senko Span A. The orange line is called Senko Span B, and finally, the gray line represents the Chiku Span. The Tenkan Sen line, which is also sometimes referred to as the conversion line, represents the short-term trend in the market and indicates the market's fast momentum or speed of price movement. The steepness or angle of this line shows the strength and intensity of the current trend, while on the other hand, when it flattens out or becomes more horizontal, it signals a decrease or weakening in trend strength. Its crossover with the Kijun Sen line, which is also known as the baseline, serves as confirmation and a signal to enter a trade, providing traders with an additional layer of validation. The Kijun Sen line is considered to be a medium-term indicator and acts as the baseline, representing the main trend direction in the market and showing us the important support and resistance levels that can help guide trading decisions. The slope of this line signals a strong trend, and when the line flattens, it indicates a ranging market. The next line is the Senko Span, which is considered the leading edge of the Ichimoku Cloud and is the faster line. It represents the equilibrium price between the Tenkan Sen and Kijun Sen. When it is positioned above the Senko Span B, which is one of the two boundaries forming the Ichimoku Cloud, it indicates a strong bullish trend in the market. Conversely, when it is positioned below, it signals a strong bearish trend. The cloud itself changes color from orange to green accordingly, visually reflecting the shift in market sentiment. Finally, the gray line is called the Chiku Span, which represents the current price of the indicator, but shifted 26 candles back on the chart. Here, you can see that it is exactly 26 candles behind the current price, and it is used as confirmation for both bullish or bearish trends. When it is above the price, it confirms a bullish trend, and when it is below the price, it confirms a bearish trend. When the green line, or Senko Span A, crosses below Senko Span B, the cloud turns orange. And as a confirmation for entering a trade, we can use the Tenkan Sen line here and say that if it is below the Kijun Sen line, it serves as confirmation for entering a trade. When the Chiku Span is also below the price, it shows us the strength of the bearish trend, and we can enter a sell position in the market, indicating that the overall market trend has turned bearish. When the Chiku Span moves above the price, it signals a possible trend reversal. Here we see that the price has entered the Ichimoku Cloud, which signals a ranging market. If the price moves above the Ichimoku Cloud, the likelihood of a trend reversal becomes stronger. When the Ichimoku Cloud turns green and the Tenkan Sen crosses above the Kijun Sen, we can consider this as a signal to enter a buy position and execute our trade. In this section, we again see the cloud turning orange with the Tenkan Sen, Kijun Sen, and Chiku Span all below the price, which serves as a signal signal to enter a sell position. In the settings section, under inputs, there are options available for us. In the first input, we can set the calculation period for the Tenkan Sen line. In the next parameter, we can set the calculation period for the Kijun Sen, the calculation period for Span B, and the calculation period for the shift lines or Chiku Span. In the next section, we can set up alerts for different line crosses along with trading signals. The first input is for a cross between the Tenkan Sen and Kijun Sen lines, and by enabling this, signals for the crossing of these two lines will be displayed and alerts will be issued. In the next parameter, we can enable or disable alerts for when the price crosses the Tenkan Sen line. In the next parameter, we can also enable or disable alerts for when the price crosses the Kijun Sen line, which will display its signals on the chart and issue trading alerts. In the final section, we can enable or disable the display of input values in the status line. By default, this section is enabled, and if we disable it, the input values will no longer be shown in the status line. Additionally, traders can use price pullbacks to the Ichimoku Cloud as re-entry points for trades or as support and resistance zones. Here, we can see that the price has pulled back to the Ichimoku Cloud, was rejected from this area, and moved upward. Again, we see that the price pulled back to the Ichimoku Cloud, sharply moved downward, pulled back, and was rejected from here. Similarly, we can use the Kijun Sen line as support and resistance levels. In this section, we see that the price pulled back to the Kijun Sen line and reacted to it here. Well, friends, we've reached the end of this indicator tutorial. We'd be happy if you share your comments and suggestions with us in the feedback section.